I think this is one of the most amazing updates this channel has ever had. In a subtle, somewhat covert manner, Ripple has been linked to more than 25% of the global financial market system. Yes, you did indeed hear correctly. The technology of Ripple has already connected 25% of the global banking infrastructure. I had to examine this report again when I initially read it. We're not talking about a partnership or a rumor today, so I thought, no way, this can't be real. But it is, and what it means for XRP is absolutely massive. If you're new here, hit the like button and leave a comment with a member of the XRP army. Then, let's talk about what may be the biggest institutional connection we've seen so far. Let's talk about integration. Ripple technology is embedded directly inside the same rails that move a quarter of the world's money. The new TCS Banks Research Journal issue 16 states that Ripple is now listed alongside SWIFT, WISE, and SEPA as part of a multi-rail cross-border payments framework, all of which are integrated through API. This means that banks using TCS BANCS can choose which rail moves their money the fastest, SWIFT, SEPA, or Ripple. Here's the part that will blow your mind. The TCS BANCS platform powers core banking for more than 25% of the world's population. The quiet part of the revolution is when AI and smart routing decide who will win, the 50-year-old SWIFT network or Ripple's blockchain rails that settle in seconds. Ripple has positioned itself not next to SWIFT, but inside the same ecosystem, side by side, a credible API-compatible solution that banks can tap instantly. So, when people continue to say that Ripple needs adoption, keep in mind that it's already there, hidden in plain sight, woven into global banking software that serves billions. Now, stay tuned because in the next section, we're going to go into the specifics of this integration, what multi-rail actually is, and why it could lead to one of the largest institutional shifts toward XRP liquidity we've ever seen. All right, let's take a closer look at this because once you realize how deep it goes, it will completely change your perspective on XRP's role. In the world of international finance, the report from TCS BANCS is not just another white paper. It is official documentation from one of the biggest providers of core banking solutions in the world, a company whose software literally powers banking systems for more than 25% of the world's population. And there, on the same page as SWIFT and SEPA, you see it, Ripple. This isn't a partnership announcement or a pilot. This is integration. Ripple has been integrated through APIs into TCS BANCS's multi-rail cross-border payments framework, meaning that banks can now settle those payments directly through Ripplet. To put it another way, banks can now connect to Ripple's technology with the same ease they connect to SWIFT. Payment rails, all within a single intelligent AI-powered routing system. This is where the fun begins. When a bank wants to move money, the AI looks at all the rails that are available, including swift, slow, and expensive ones. SEPA is limited to the EU. Ripple is fast, cheap, and instant. Guess which one it will choose. With Ripple's inclusion, it's now directly competing with SWIFT, and it's winning on efficiency, speed, and cost. They didn't have to fight the old system from the outside, they simply integrated into it. They didn't have to replace banks, instead they gave them a better tool. And the best part, this isn't speculative hype, this is utility in action. This is the future where Ripple and XRP are not optional, they're part of the infrastructure. The language in the report says it all, positioning Ripple directly in front of banks and financial institutions worldwide as a credible API-compatible solution for intelligent and interoperable settlement flows. That's not crypto lingo, that's banking language, that's credibility, that's adoption. Every single transaction that selects Ripple's rail has the potential to use XRP as a bridge asset. This means that as AI-driven routing systems determine the best settlement path, XRP liquidity could be automatically tapped behind the scenes, increasing its real-world utility and transactional volume without a single retail investor exerting any effort. I have to admit that Ripple will never be able to compete with SWIFT because it is now coexisting inside the very network that SWIFT once controlled, and every time a payment passes through those rails, Ripple's presence grows, not in theory, but in practice. Now, in the next section, we will discuss how this connection expands Ripple's reach throughout Europe, and why the European CBDC experiment may be using the XRP ledger in ways that could rewrite the future of central bank money. Trust me, you won't want to miss this next section because the TCS integration isn't happening in a vacuum. Behind the scenes, we are observing a clear pattern. Europe's financial system is subtly integrating with Ripple's technology, and it's happening more quickly than most people realize. The European Central Bank, or ECB, along with several European commercial banks, started testing technologies for their upcoming digital euro project. One company that caught my attention was Axiology. If you've been following Ripple for a while, you'll recognize that name because Axiology's infrastructure is built on the XRP ledger, XRPPL. Let me reiterate. The ECB is testing the same ledger that powers XRP transactions as part of its digital currency experiments. This isn't just a rumor, though, as Marius Urgal, co-founder and CEO of Axiology and a former central banker, publicly stated, Axiology is digital assets infrastructure cutting across multiple layers of the capital markets, compressing them into one efficient system on the XRP ledger. The fact that Axiology is creating a regulated, compliant infrastructure that enables banks to transfer funds, settle deals, and tokenize assets on XRPPL is enormous. Consider the implications for Ripple's vision. We're not just talking about cross-border remittances anymore. We're talking about the actual infrastructure of Europe's financial future running on XRP's technology. The ECB isn't doing this to experiment. They're doing it because legacy systems are broken. Traditional cross-border settlement takes days, costs billions in friction, and locks up trillions in Nostro Vostro accounts worldwide. Ripple's technology eliminates all of that. The opportunity before us is in trillions, and we truly want to stop talking about millions and billions and start talking about trillions. He wasn't kidding. This is the scale Ripple has been working towards since 2012. Imagine a European digital euro that runs through Axiology's XRPL-based infrastructure with TCS/BNCS powering banks that already have Ripple APIs integrated. Both systems are designed to be DT interoperable, which means they can communicate with each other. Do you see where this is headed? Ripple's network isn't just a part of the new financial systems, it's becoming the glue that holds together private bank systems, central bank digital currencies, and global liquidity rails. What's even more impressive is that the institutions involved aren't small players. We're talking BNY, Mellon, Citi, Franklin Templeton, and even entities that we've talked about the integration, we've talked about Europe, but now it's time to zoom out because this is where the whole global picture comes together. All right, guys, when these systems go live, they won't need to adopt XRP. They'll already be using it behind the scenes every time the routing algorithm chooses Ripple's rail. This is the quiet revolution, the one that's taking place inside boardrooms, not Twitter Spaces. And we're only scratching the surface because we're going to go into how this integration connects to the trillion-dollar liquidity problem, the Nostro Vostro trap that Ripple was literally created to solve, and how XRP could unlock that frozen capital and flood global markets with on-demand liquidity. The term Nostro Vostro accounts may sound complicated, but it's actually just the plumbing of the old banking system, and it's broken. Here's how it works. When a bank wants to send money to another bank in another country, they have to hold that country's currency in a pre-funded account. Multiplying that by thousands of banks worldwide, you get trillions of dollars locked up waiting for settlement, money that can't be used for loans, investments, or innovation. According to recent estimates, over $15 trillion is trapped in these dormant accounts worldwide. Imagine a world where that capital could be released instantly, where banks don't have to pre-fund anything because settlement occurs on demand. That's exactly what Ripple is creating. With Ripplet and XRP acting as a bridge currency, a bank in the US can send dollars, convert them to XRP in seconds. And the recipient bank in Japan receives yen instantly. No middlemen, no waiting, no pre-funded accounts. And now that Ripple has been integrated into the TCS/BNC platform, which remember powers banking for a quarter of the world's population, this on-demand liquidity mechanism isn't just a demo feature. It's sitting inside real operational banking systems. That's not hype. It's a quiet revolution in the way money moves. Now, imagine what happens when AI-powered routing, like the kind TCS is already using, automatically determines the best path for every payment. If Ripple's rails are cheaper and faster, which they are, the system will always choose them. And when that occurs, XRP liquidity is tapped seamlessly, not because of speculation, but because it's the most efficient option available. This is the first time in history where efficiency itself can drive adoption. It is concerned with speed, cost, and dependability, and that is where Ripple outperforms Swift. Swift's average transaction time is hours or even days, whereas Ripple's is 3 to 5 seconds, Swift fees are up to 6%, and Ripple's is fractions of a cent. Now here's where the numbers get crazy. If Ripple's rails capture even 5% of the global cross-border volume, that's hundreds of billions of dollars flowing through XRP every year. At 10%, you're looking at trillions of throughput. Additionally, because of the way XRP is designed, it doesn't need to replace all of the money in the system. It just needs to move it more quickly. Each XRP used in settlement can be turned over dozens or even hundreds of times per day. That's real utility, the kind that creates organic sustained demand. As a result, while everyone else is arguing over price predictions, the institutions are quietly constructing the infrastructure that makes XRP indispensable. Don't get me wrong, the banks are aware of what's coming. They won't risk creating isolated proprietary systems that aren't able to communicate with one another. They need interoperability, which Ripple is providing right now. For this reason, I find it funny when people say that banks will create their own coins. Yeah, but how are they going to connect their private ledgers to every other bank in the world, not without a neutral bridge asset? And that's where XRP becomes the great connector. The phrase bridge currency isn't just a catchphrase, it's the answer to the global liquidity crisis. And now that Ripple has been integrated into the very systems that transfer 25% of the world's money, that solution is not just theoretical, it is operational. Next, we will discuss what this means in the long run, how this degree of integration could change the course of global finance, how CBDCs fit into the equation, and why XRP might become the digital backbone of the new financial era. Believe me, this is the big picture that every XRP holder needs to hear. Now that we have discussed integration, technology, and the liquidity issue, let's zoom out and look at the global financial system, because what is happening here isn't just another fintech upgrade. It is the rewiring of the global financial system. Consider this. We are moving from a fiat-based, manually settled, paper-driven financial world to a digital, automated, and programmable economy, and the infrastructure that supports that new system, the rails that move money, data, and value, are being built right now, and Ripple isn't standing on the sidelines of that shift. They're in the same room, sitting at the same tables as SWIFT, the ECB, the IMF, and the BIS, the very organizations that set the rules for how money moves around the world. And while the majority of the world is preoccupied with meme coins and speculation, Ripple has been making genuine connections with real financial players. The integration of TCS bands wasn't a coincidence, and Axiology XRPL's connection to the digital euro isn't a fluke. These are strategic moves in a long-term plan that's aligning the most advanced blockchain technology with the most powerful financial institutions on the planet. To put that into perspective, TCS isn't exaggerating when they say that their BNCS platform powers banking for a quarter of the world's population, which is close to 2 billion people. Now, the same core system running those banks, the ability to conduct cross-border payments using XRP, is not a test. Rather, it is an example of infrastructure-level adoption. When you combine that with Europe's push for CBDCs, it becomes evident that Ripple is not posing a threat to the system, but rather is becoming a part of it. This is because the old financial world is not going to vanish overnight. Instead, it will evolve, and the technology that facilitates that evolution, interoperability, instant settlement, and global liquidity, is where Ripple excels. The new financial world will be multi-rail, multi-asset, and fully digital, meaning that stable coins, utility cryptos like XRP, and yes, utility cryptos like XRP, all coexisting and interacting across a shared interoperable infrastructure. The XRP-PL is designed specifically for that world, and it is quick. Because of its scalability, compliance readiness, and focus on moving value efficiently, banks, fintechs, and even governments are beginning to investigate how XRP fits into their digital strategy. This is why Ripple's partnerships are so important. When the ECB, TCS, or major banks integrate Ripple APIs, they are not experimenting with cryptocurrency. Rather, they are adopting infrastructure. This is similar to how you don't think about TCP/IP every time you send an email. It's just a part of how the internet functions. Soon, Ripple's rails will be the same, invisible to the public but crucial to the movement of money globally. The answer to the question of when XRP will take off is when the system turns the key, because the rails are already being laid, the APIs are already connected, and the banks are already testing the flows. This isn't about if, it's about when. And when that time comes, we're not talking about millions or billions, but rather trillions of dollars moving through digital networks that finally work efficiently, seamlessly, and globally. That's the moment XRP was built for. Now, in the next and final section, we're going to bring everything together: the vision, the timeline, the emotion, what it means for XRP holders, and why it might be best to wait through the clamor. If you've read this far, you already know that this isn't hype, it's history in the making. Ripple isn't just another blockchain project vying for attention. They're the ones sitting in boardrooms with regulators, central banks, and institutions that move trillions of dollars every day. For years, they've been doing it quietly and strategically. While everyone else in the cryptocurrency world was yelling about price predictions and meme coins, now piece by piece the puzzle is being revealed. TCS BANSC integrated Axiology's testing with the European Central Bank, and BNY Mellon City Franklin Templeton are all positioning themselves around interoperability and tokenization. When you hear Axiology working hand-in-hand with the ECB on digital euro tests to confirm they're using XRPL as the backbone, that's not a maybe, that's happening. When you see TCS BNCS using AI-powered routing to choose the fastest, cheapest rail for every payment, and Ripple is one of those rails, you realize that XRP doesn't need permission to win. The system will choose efficiency, and XRP is efficiency. Well, here we are, years later. And now the infrastructure, the technology, and the partnerships are aligned. Because when the banks flip the switch, it won't be a public celebration. Instead, it will be code running in milliseconds, and every transaction that passes through those rails will increase XRP's real-world utility volume and eventually its value. It won't happen with a loud bang. Instead, it will happen quietly all at once, and the people who are paying attention, doing the research, connecting the dots, and remaining patient will be the ones who are already positioned. We've seen this pattern before. Innovation doesn't just happen overnight, it builds layer by layer until it suddenly becomes the new normal. Bridging the gap between disparate financial systems, allowing central banks, private institutions, and fintechs to finally speak the same digital language. Imagine a world in which value flows as easily as information, where you can send money across borders as fast as you send a text message. That's not a dream, it's the design. And that's why those who really understand the purpose of XRP don't panic during slow months. They know that the foundation is being laid, and they know that utility is growing behind the scenes, because one day soon the lights will flicker on and everyone will realize that Ripple's technology is already operating the new global financial backbone. As we wrap up today's video, keep in mind that the tides don't ask for permission to rise, they just do. You're holding a key to the bridge that connects every major market on the planet. And when that bridge goes live, like when those AI systems start choosing the Ripple rail, when the banks and CBDCs converge on interoperability, that's when everything changes. This isn't a hype story, it's a story of patience, preparation, and positioning.